Here's a robust strategy capable of tripling the accuracy of the Elder Ray trading strategy while maximizing its profit potential. This strategy is known as the Avatar trading strategy as it involves four main elements of market technical conditions: bullish power, bearish power, market trend, and market saturation or overbought and oversold conditions. Alright, let's begin discussing a trading strategy that's not widely known among traders, especially beginners. So, this is a beginner's guide to bull's power and bear's power indicators in the forex and stock market. When seeking oscillators capable of producing buy and sell signals, incorporating bull's power and bear's power indicators into your forex charts is advisable. Although these indicators are distinct, they operate similarly and are typically employed together. What are the bull's power and bear power indicators? Developed by Dr. Alexander Elder in 1989 and introduced in his book Trading for a Living, the Elder Ray indicator is comprised by three elements: bear's power, bull's power, and a 13-period exponential moving average. These indicators are described quite well by their names. The bull's power indicator is telling you how strong the bulls are, the buyers. The bear's power indicator is telling you how strong the bears are, the sellers. Sometimes, they are also referred to as Elder Ray indicators. Elder himself apparently coined this name and was inspired by the idea of an X-ray for the markets. As I said earlier, the Elder Ray indicator is comprised by three elements: bear's power, bull's power, and a 13-period exponential moving average. As the high price of any candle shows the maximum power of buyers and the low price of any candle shows the maximum power of sellers, Elder uses the 13-period EMA in order to present the average consensus of price value. Bull's power shows whether buyers are capable of pushing prices above the average consensus of value. Bear's power shows whether sellers are capable of pushing prices below the average consensus of value. According to Alexander Elder, bull power should remain positive in normal circumstances, while bear power should remain negative in normal circumstances. In case the bull power indicator enters into negative territory, this implies that sellers have overcome buyers and control the market. In case the bear power indicator enters into positive territory, this indicates that buyers have overcome sellers and control the market. A trader should not go long at times when the bear power indicator is positive, and he or she should not go short at times when the bull power indicator is negative. 13-period EMA's slope can be used in order to identify the direction of the major trend. What do the bull's power and bear's power indicators show us? What we are looking at with the bull's power and bear's power indicators is the distance between the EMA and the high or low. This corresponds with the influence of the bulls or bears to continue to push price past the EMA. You will notice on your charts that the bull's and bear's power indicators can both display negative or positive values. Note that positive values in the bull's power indicator indicate bullish strength, while negative values in the bear's power indicator indicate bearish strength. How to plot the bull's power and bear's power indicators on your charts. Here are the steps to plot the bull's power indicator and bear's power indicator on your MT4 Forex charts. First, you need to plot the moving average on your chart, since you need to look at it while planning trades. Click on Insert, then Indicators, then Trend, then Moving Average. In the Method drop-down, click on Exponential. Then set the period to 13. Apply to Close. Choose whatever color you like, and add the EMA to your chart by clicking OK. Second, add the bull's power indicator to your chart. To do this, click on Insert, Indicators, Oscillators, then Bull's Power. Third, add the bear's power indicator to your chart. To do this, click on Insert, Indicators, Oscillators, then Bear's Power. We recommend that you change the color of the bear's indicator to red in order to make it stand out from the bull's indicator. That's all there is to it. You are now ready to look for setups using the bull's power indicator and the bear's power indicator. How to use the bull's power and bear power indicators while you trade. Elder not only created this set of indicators, but he also proposed a method for trading with them. Here are his rules for buying and selling. Buy when? First, the EMA is rising. Second, bear's power is negative but moving closer to zero. While those are the only two required conditions, the following conditions suggest an even more ideal setup. First, the more recent histogram peak for bull's power is higher than the one before. Second, there is bullish divergence between the bear's power histogram and price. Sell when? First, the EMA is falling. Second, bull's power is positive but moving towards zero. These optional criteria make for an even better setup. First, the most recent histogram low for bear's power is lower than the one preceding. Second, there is bearish divergence between the bull's power histogram and price. Key point: Elder's method for trading using the bull's and bear's power indicators requires that you plot the EMA on your chart and that you meet two required criteria for entry. There are two optional criteria as well for even stronger setups. Improving accuracy by tripling it while maximizing profit potential. You've grasped the basic rules of the bull's power and bear's power indicators developed by Dr. Alexander Elder, also known as the Elder Rate Trading Strategy. As a novice trader, some of you may find this strategy challenging to understand. Based on my experience, trading signals generated by this strategy are seldom encountered. Therefore, we're now heading towards refining the Elder Rate Trading Strategy. Alright, without further ado, let's dive right in. Enhancing the accuracy of the Elder Rate Trading Strategy by threefold while maximizing profit potential. This is a robust strategy capable of tripling the accuracy of the Elder Rate Trading Strategy while maximizing its profit potential. This strategy is known as the Avatar Trading Strategy because it involves four main elements of technical market price conditions: bullish power, bearish power, market trend, and market saturation or overbought and oversold conditions. The Avatar Strategy Trading Rules. Since the Avatar trading strategy functions to pinpoint the most profitable market entry timings as determined by the Elder Rate Trading Strategy, traders only need to add the stochastic oscillator to identify Elder Rate signals in the overbought and oversold areas. Thus, if market price movements are in the oversold area, traders simply await the buy signal generated by the Elder Rate strategy. Conversely, if market price movements are in the overbought area, traders only need to wait for the sell signal generated by the Elder Rate strategy. What needs to be noted in the Avatar strategy is that the stochastic oscillator setting is 13.33, following the periods specified by the Elder Rate strategy. These are the details of the strategy. Buy when the price is above the EMA line. Bear's power histogram is negative but moving closer to zero. The stochastic line crosses above the level 20 after being in the oversold area. Bull's power histogram is above zero and sufficiently high. Set the stop loss below the nearest swing low. This strategy has high accuracy, so set a minimum target profit of 3 times the stop loss. Sell when the price is below the EMA line. Bull's power histogram is positive, but moving closer to zero. The stochastic line crosses below the level 80 after being in the overbought area. Bear's power histogram is below zero and sufficiently long. Set the stop loss above the nearest swing high. Once again, as I mentioned earlier, this strategy has high accuracy, so set a minimum target profit of 3 times the stop loss. As seen in the examples above, we can conclude that this is a highly productive trading strategy for making money in the forex, crypto, commodity, and stock markets. The combinations of indicators I have explained in this video can be manually applied as they are not difficult to implement. However, if you need these settings, I have already provided them in the video description column. I have included a template with a system that you can easily apply to your charts, automatically plotting all these indicators accurately. This way, there is no need for any additional complexity. Get the download link in the description. General tips for using the bull's power and bear power indicators. First, use all system components together. Elder created the bull's and bear's power indicators to be used together along with the 13-day EMA. They were not intended to function as standalone individual indicators. Second, test before going live. Before you use this system to trade with real money, make sure you backtest and demo test. Once you know you have the potential to be profitable, you can risk real money. Third, modify the system if you want, but again, test. You do not necessarily need to use Elder's system exactly as he engineered it. But if you are going to make any changes, do not forget to test them first. Key point: however you choose to use the bull's and bear's power indicators in your trading, always check if you are profitable in demo before going live. As always, if you learned something new, Or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.